This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks look muted after modest Wall Street gains overnight. Australia is set to hold its key rate later amid a tight job market and renewed inflation pressures. Concerns are mounting that a looming U.S. government shutdown could delay the release of key labor market data. And President Trump and his Israeli counterpart agreed to a plan to end the war in Gaza, but it's unclear if Hamas will accept the proposal.
And this is a setup across Asia. We've been watching the Japanese yen strengthen in the overnight session, especially after we heard those comments from a BOJ board member that's been perceived as dovish so far, indicating the rising need for a rate hike. Will we see that move then in October is a key question, as we're also waiting today the RBA rate decision in Australia. Hold expected on that front. We're also expecting PMI numbers out of China. When it comes to economic data, we're already getting that from South Korea. August industrial output rising 0.9% year on year. When it comes to the yearly number, a big miss. The estimate was for 2.6% growth. When it comes to output rising month on month is gains of 2.4%, which is a beat to the upside. Of course, we continue to contend not only with shipments of semiconductors staying strong, but U.S. tariffs on South Korea, which haven't been lowered despite the fact that they got to a trade deal with Washington. So when it comes to U.S. tariffs, of course, is not only a South Korean problem. We're talking about the entire world. President Trump also threatening tariffs on the likes of furniture industries, not to mention film now, 100% on movies made outside the United States. Take a look at how U.S. futures are setting up, because we had seen some gains in the previous session. But of course, this after we pared back from those highs, given also the government shutdown concern that could come as soon as Wednesday. And those safe haven demands really leading to that boost in the Treasury space, and that rally sending the 10-year yield at 1 point below that 470 level. And also the oil slump sort of helping that safe haven move. And we have seen, of course, oil prices a little bit under pressure given the expectation of more production, despite the fact that we do have geopolitical risks as well, Avril.
Indeed, Shery. Those risks include President Trump and the Israeli Prime Minister Benjamin Netanyahu now agreeing to a 20-point plan designed to end the war in Gaza. But it's unclear if Hamas will accept the proposal, which calls for the group to relinquish control of Gaza and release all hostages.
I also want to thank Prime Minister Netanyahu for agreeing to the plan. If accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours.
Let's bring in Bloomberg's Michael Heath on this. So, Mike, a lot is predicated on what Hamas's response will be, but what is your sense of the extent in which this 20-point plan helps to address some of these long-standing issues?
Yes, Avril, it's a very ambitious plan. It's sort of a synthesis of various programs or plans that have been put forward in recent years. But the key issue here, I guess, is that President Trump has been able to leverage his relationship to get Prime Minister Netanyahu on board. But as you say, I mean, Hamas hasn't been part of bringing this together, and they need to respond to it. And secondary to that, Prime Minister Netanyahu also needs to sell this to his cabinet, and just recalling that his cabinet it's very, very right wing. It's got representatives from sort of settler groups there as well. So there's some elements of this plan that they're really not going to like. There's also quite a bit of fudging in the plan as well as we go down the path. But I think the most interesting part, and probably what's going to appeal to Hamas the most, is, as you mentioned, and as President Trump mentioned, that the 48 hostages, so 20 of them are believed to be alive. The remainder would be their bodies. They're to be released, and then in return, Hamas would get 250 Israeli prisoners that have been sentenced to life. And now this is perhaps a one-off opportunity for Hamas to actually get these people released, and then another 1,700 people who've been detained during the war since the Hamas attack a couple of years ago. So the prospect there of getting those long-term imprisoned people out for Hamas is probably the most appealing aspect for them, but we really just have to wait and see what they make of it all.
What's been the reaction so far, especially among Middle Eastern nations?
Well, I think fairly positive. I mean, there was a meeting last week, obviously, at the UN with President Trump, and where he sort of has floated this plan. And part of the idea is that countries like Saudi Arabia that are prepared to initiate relations with Israel after so long, they can't do so, and they say this straight out, until there's some sort of peace and some sort of process to do with the Palestinians. And I mean, it's obviously a huge hurdle, but the potential, if even half of this comes to pass, it could open the doors to a lot of diplomatic recognition and a lot more trade and development, all sorts of things. But it really, it is a big hurdle to get across. And one of the major ones is that Hamas has always been saying that Israel must withdraw from Gaza immediately. And within the 20-point plan that President Trump has put forward, it's really not clear how that process or the timeline for that process. And I think that's one of the things that Hamas is going to either want more information from or lead it to reject it. And it seems that in many respects, part of perhaps the reasoning, he's always sort of running a couple of sides there. I suspect that Prime Minister Netanyahu doesn't think that Hamas will accept it. So if they did, then that would be a pretty dramatic breakthrough we'd be seeing here.
Michael, thank you so much. Bloomberg's Michael Heath with the latest. Let's bring in Kirstin, Fontenrose, president at advisory consulting firm Red 6 International. She previously served as senior director for Gulf Affairs at the National Security Council. Kirstin, really good to have you with us. First off, let's start with some of the points that Mike was just making about whether we see acceptance from Hamas. What do you make of this?
I think we should expect Hamas to be spoilers initially. They tend to follow a playbook where they will participate in negotiations and then put new demands on the table right before this is final. But in this case, they're seeing a unified voice from the Arab states, which is a little bit surprising and really impressive, that will pressure them to accept these conditions, accept this plan. So there'll be more pressure than they've seen previously. I think they'll also listen to President Trump's words saying that if they do not agree to this plan that has received 8 Arab and Muslim states' input, as well as Israel's input, that if the plan falls apart because of their non-compliance, then Israel would have his full backing to finish the job of destroying the threat of Hamas inside Gaza. So they will be thinking about taking that seriously, about what an unleashed Israeli defense forces with no, U.S. reining them in would look like if they chose to say no to this one chance for the war to stop immediately.
As Mike was also alluding to, it does seem quite a positive development as you raise that you're seeing that unity among Gulf states in backing this plan. How do you see the role of the Qataris in a potential implementation as crucial to this plan actually working out?
They will be crucial, as will, frankly, every other state that was involved in this conversation, perhaps with the omission of 1 or 2. But remember, you saw 8 Arab and Muslim states here. So Qatar will be critical in bringing Hamas around to this. And Qatar will be going to them with the message saying, we're not here to get your demands anymore. We're not here to do a back and forth. This is on the table. All the Arab states are aligned, plus Turkey, plus Indonesia, plus Pakistan. You literally don't have anyone who's going to have your back in negotiations should you choose to turn this down. So Qatar will be delivering a tough message. But then you have Indonesians offering to send troops. You have several states that will be called to provide training, like Egypt and Jordan, for Palestinian police forces. You'll have funding for redevelopment coming from other parts of the Gulf. So each one of these states is playing a role.
Yeah, it was interesting how President Trump set up that phone call between Prime Minister Netanyahu and the Qatari Prime Minister, given, of course, that attack on Doha that did not sit well for the Middle Eastern state. But what do we think about the increasing isolation of Israel, despite the fact that Hamas may be backed into a corner because of this cooperation and understanding between Gulf states and the plan that President Trump has in place? The fact that Israel continues to be isolated on the international stage and is receiving a lot of criticism, will they have the bandwidth to go against Hamas if this deal is rejected?
They would have the bandwidth militarily, but would they have the bandwidth in terms of international goodwill? Likely not. This may be doing Prime Minister Netanyahu a little bit of a favor, because while he is the face of this policy, a lot of the preference for a hardline military operation are coming from right-wing factions within his government. And this insistence by a unified Arab and Muslim world, and by the U.S. government, and by European states as well, may give Bibi the power to turn to some of those factions and say, we're in a corner now as well. We don't have a choice. This is an all or nothing offer. And if we say no to President Trump's personal invitation to be a part of this peace board he wants to set up, we may not get another chance from the U.S. that will be in our favor.
The terms of this plan also reference a future where the conditions for a Palestinian state could finally be in place. Do you see this as a potential groundwork for a broader Mideast peace?
It could, but honestly, there's still quite a bit to be worked out specifically on that note. The plan put forward by President Trump does not use the phrase two states. It says that the new peace board will oversee redevelopment in Gaza until the Palestinian Authority is reformed and can take back control of Gaza. Does not mention a Palestinian state. Then you have the joint statement from the Arab and Muslim states who are briefed on the plan and will be central to it, calling for governance to eventually be handed over to a then reformed Palestinian Authority that would administer an integrated Palestinian state of both Gaza and the West Bank. And then you have Israel saying it does not see a role for the Palestinian Authority because, to their point, Palestinian Authority has had 30 years to prove it can govern, and it's failed to do so and has been rife with corruption. So you have similar generic language saying we're looking toward Palestinian control of at least Gaza, but you have three different framings right now. It seems like each party has said, we're okay with that for the moment because we really just need to get this approved. We need to get this across the line so that the war itself can stop and we can have a partial Israeli withdrawal and return of hostages. They're not as concerned about exactly what that means right now. They're talking about pathways to two states. They're talking about reformation of the PA. Those are long-term eventualities. So right now, the emphasis is let's come up with language we all agree on so we can begin.
And potentially make some headway on this. It could also mean Trump's role as a peace broker gets bolstered. But to your point, and Shery's point earlier about how Israel doesn't seem quite bothered at this stage about how it's being isolated in the international community, how do you see Trump potentially exerting pressure on Netanyahu if things don't pan out?
Well, I think him offering to pose himself as the chair of a peace board, which is really uncommon for a president of a large nation to offer to put that kind of time and effort into a single individual world issue, they almost can't say no. Because if they say no to that and the president says, then we're done paying attention, you're on your own, Israel will be fighting perhaps not a war on the ground against all the Arab states, not that. None of them want that. But a unified voice of the Arab states that would be in Washington, would be in Europe. They haven't had to face that before, and I don't think they relish the idea of that. So, and that strike in Doha that you referenced earlier is exactly what finally brought all these voices that often come to Washington complaining about each other into one voice saying, we have to have a solution for this going forward. Israel cannot be unchecked. Hamas, we agree, cannot be in charge of Gaza. We're all going to agree on the basics so that we can get Israel to start withdrawing, get Palestinians put back in charge of their own territory, and start to try to rebuild from there. So I think he's seeing the pressure is not only from Washington, and it's from globally, but it's also not only from the administration. It's from President Trump himself, who's saying, I will invest personal time and effort. Boy, that's really hard to turn down if your country is reliant on that person's individual support for your military to sustain its own operation.
Kirstin Fontenrose, always good to have you with us. Thank you so much for your insights, President at Red 6 International. Coming up on the Asia trade, AlphaSimplex Group tells us why they're concerned about the potential for reduced U.S. rate cuts. And we speak with the CEO of Australia's new national space innovation firm, the ASII, about space-enabled solutions for the country. Much more ahead. This is Bloomberg.
we're being challenged on both sides of our mandates. So in addition to the inflation side, which has been above target for 4.5 years, and from my forecast, probably won't get back to target for another 1 to 2 years. I think end of 27 is what I have in my forecast for when we'll get back to target.
Cleveland Fed President Beth Hammack there. And take a look at the U.S. Treasuries, because it's been getting increasingly difficult to navigate the curve. There's been overall a rethink of the curve steepener trade of the summer. Overnight, we did see Treasuries falling across the curve, and this included the 10-year, which fell towards the 4.14% handle. Traders are also now weighing these shutdown risks. Let's bring in Bloomberg MLive strategist Mark Cranfield. So, Mark, it's difficult to navigate the curve. Then you have these shutdown risks as well. Is curve flattening the next thing that we should be watching for?
Okay. Bond traders are simple folk. And if you give them a few steps, they will certainly follow, and they'll push yields lower. So basically what's happening here is they see the threat of a shutdown. If the US government is not around, they're going to spend less money. That means yields are going to come down. If we do go into a shutdown, we're also not going to get the non-farm payrolls data, which was very important coming up this Friday. They will assume the worst. It's going to be the jobs market will get even more, the situation will deteriorate there. Again, yields need to come down on the back of that. Whichever way you skew it, in the near term, traders will assume that Treasury yields are on a downward slope. And that means for the US dollar as well, that will undermine the US dollar. But it's positive for the stock market. And since the stock market is so much driven by tech and AI themes anyway, US government shutdown is not really relevant to what stock markets have to think. So if you put all that together, in the near term at least, none of this is really destabilizing for markets. In fact, it's a net positive for US markets and for risk assets in general. So the Fed may be concerned about inflation. They may have other factors as well. As far as the traders are concerned, mostly what they're looking at is the fact that the Treasury market is going to support the underlying risk theme, and the curve is probably going to flatten as well, because we're getting into a situation where, as people think the Fed will need to do more work next year, there'll be a grab for yield. People will go further out the yield curve, particularly towards kind of 30-year sector, which has been stabilizing, and the curve will probably flatten from there. All in all, it's making life easier for traders and investors, not more difficult.
Mark, we were also watching the JGB space because we saw the markets really pare back those gains after a comment from a BOJ board member, Asahi Noguchi, who was perceived as dovish, but his commentary potentially pointing to a rate hike as soon as next month.
Traders are certainly thinking that way. If you look at the current pricing, it's something about 62% odds now, pricing for a BOJ hike in October, which is very high by recent standards. So the traders have been pretty undecided on what the BOJ will do. And today we have a 2-year JGB auction, which is going to be a little bit more difficult, considering now that expectations are much higher. That's also helping the yen, of course, a little bit stronger as well. It really comes down to the Tankan report tomorrow. Providing that the Tankan report is pretty much in line, it will show the Japanese economy, is doing okay. Not gangbusters, but at least it's moving along. That seems to be the final piece for the Bank of Japan. Providing they see a decent Tankan report, I think the investors will assume the BOJ has enough to move forward with a rate hike in October. However, if you look at the history since Governor Ueda came into place, rate hikes have tended to be very spaced out. So we might get one in October. Nobody will be expecting one for quite a while after that.
And then we also have China PMIs today after that industrial profit improvement. But we also go into Golden Week. Do you expect trading to be pretty choppy?
It could be a little bit subdued today, as you say, because of the holiday. But there is a real risk of FOMO going on here. If anything, we would expect Chinese markets to do reasonably well today, because while they're out for a week, in that time, US markets could go ahead quite a bit, particularly because of the tech themes. By the time Chinese markets come back, there could be a huge catch-up play to be done. So it's unlikely that investors will shed risk too much going into this holiday, because they will fear they're going to be caught out by the time they come back next week. So if anything is playing into the hands of people who are already relatively bullish on China. Plus, we're going to see this gold stock. Zijin will be trading for the first time today, expecting it to be a tremendous IPO. Looking at the grey market, it was up more than 50%. Again, that will give a boost to confidence in the market. So all in all, it'll be surprising if Chinese stocks decline too much today.
Bloomberg M-Line strategist Mark Cranfield there with everything on what to expect on economic data and, of course, monetary paths across Asia this week. But really, Avril, what we've been following also is with the concerns over trade, with the concerns over perhaps monetary policy even subduing a little bit, we have continued to see these big deals around the world. We're talking, for example, the latest, Electronic Arts, now agreeing to sell itself to a leveraged buyout, the largest on record. This would be to a group of investors that includes a firm managed by President Trump's son-in-law, Jared Kushner, also Saudi Arabia Sovereign Wealth Fund. Now, this is a massive deal. We're talking about a potential $55 billion buyout, and this would be valuing the video game company at around that $55 billion mark. And it's really the latest effort in order to diversify beyond oil into sports and gaming that has been pursued by Saudi Arabia. And of course, given the tumultuous sort of backdrop, we have not seen as many of these huge deals, but now with some of that uncertainty subsiding over trade and over monetary paths, we are now seeing these massive agreements on M&As. Investors for this deal agreeing to pay $210 per share in cash, which is already a 25% premium to where EA traded before we heard about these talks.
And to your point, this is actually the most active quarter for mergers in more than 3 years. So we are seeing that deal making that was expected to resurface under the Trump administration. We are seeing these signs. And particularly if you look at this deal for the likes of JP Morgan, right, it's seen as a win versus the private credit industry, kind of fending things off, given how such transactions carry some of the juiciest fees. We are seeing $20 billion in financing. That's actually the largest debt commitment ever by a single bank for such a deal. So a bit of a windfall there. And the timing of this deal is also really interesting to see, because you alluded to how this is a turbulent time for this almost $180 billion video game industry, which saw this prominence during the pandemic, which actually led to a glut of games. But sales more recently have been faltering. So really interesting timing for this deal as well, Shery.
Yeah, and yet a little bit of caution also, right? I mean, we saw those cross-border transactions actually only gaining about 30% or so, which is one of the lowest numbers in the last few years, given, of course, the rising risk always of protectionism and President Trump's tariffs. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how commodities are faring against this geopolitical backdrop. Overall, traders do seem pretty skeptical about the Gaza plan. Their focus seems more to be about the reporting that OPEC could be ramping up its production come November even more, and oil overall has snapped its winning streak. We are also keeping tabs on gold prices after it notched another record. Also, along with these concerns of a U.S. government shutdown, we'll not just be watching these Australian mining-related stocks at the open. Zijin Gold's trading debut, also one to watch. More ahead on the Asia trade. This is Bloomberg.
We laid out to the president some of the consequences of what's happening in healthcare. And by his face and by the way he looked, I think he heard about them for the first time. And so he seemed to, for the first time, understand the magnitude of this crisis. And we hope he'll talk to the Republican leaders and tell them we need bipartisan input on health care, on rescissions into their bill.
Whatever our disagreements are, let's negotiate with them. Let's talk about them. Let's figure out a bipartisan solution, but you don't shut the government down. In other words, you don't put a gun to the American people's head and say, unless you do exactly what Senate and House Democrats want you to do, we're going to shut down your government. That's exactly what they're proposing out there.
You heard from Senate Minority Leader Chuck Schumer and also Vice President J.D. Vance on the looming U.S. government shutdown. Let's get the latest from Bloomberg senior editor Derek Wallbank. Derek, President Trump met with congressional leaders. How close are we to averting a shutdown, and what are the biggest sticking points?
Well, Shery, I'm sorry to say that we're about no closer than we were before they started talking. The leaders did meet at the White House. That included both of the Republican heads in Congress as well as the Democratic heads in Congress, Trump, Vance. And they left very much, I think, after an articulation of the things that they disagree about. The key one right now for Democrats is health care. If you go sort of on a current law baseline, there are some subsidies, some healthcare subsidies that keep the overall price of healthcare down on the Obamacare exchanges, and some of those are set to go away. And so on a current policy baseline, Democrats are basically saying, look, just extend what's going on right now, and that'll be fine, and then we can sort of all go forward with this. And Republicans are saying, again, on this current law baseline, we're trying to do something that's clean. We've put forward something that's clean. We need your votes. Let's go. Now, Republicans are in a situation where in the Senate they do need Democratic votes here. They can't do this alone, even though they have unified control of Washington. They need about 8 votes. That's because Rand Paul on the Republican side tends to vote no on these things. So you need about 8. Right now they've got 1. So you need 7 more. A jailbreak of that size is going to be something that's probably negotiated unless we get into a situation where at noon Hong Kong time tomorrow, everything sort of starts to shut down. Now, that becomes a very difficult situation because at that point, somebody has to give. Somebody has to essentially lose for free and decide that the cost of losing is so bad that they just are willing to vote for anything in order to get out of it. That is how a lot of shutdowns tend to resolve. The easier way is that both sides find an off-ramp that they can both agree with, maybe a short-term extension to allow some talks to continue. We'll sort of see if something like that develops right now. But right now, nothing like that is quite in the offing. There's still time, though, a little more than 24 hours.
If we do see a shutdown, we could have either side assigning blame. That's the exercise that tends to come through. But Derek, talk to us about the worry about mass firings, because that seems to be allayed, for the moment at least.
Well, Avril, I think that's one of the key questions and pressure points Republicans were trying to put forward to try and heap pressure on Democrats. The idea that rather than furloughing government workers, which is to say stop working, you go home, and then we'll bring you back at the end of this, the Trump administration was talking about cutting workers who are in places that they say don't align with President Trump's vision. Now, we've gone through all of the shutdown, showdown plans that agencies are putting out, and those are, continuing to come. And so far, we're not seeing a lot of language about permanent layoffs. Now, all of that could change, but that's kind of the situation that we find ourselves in right at the minute. The idea being maybe that takes a little bit of temperature off the table. But even the threat of this, Avril, is something that has increased the stakes of this showdown. And it also comes as the White House has been more than happy to go through and pull money out that they don't like, to refuse to spend some things that they don't like. And Democrats, frankly, have been incensed by this, have been furious about this, about DOGE, about all of those sorts of things, and say that the White House has been operating in transparently bad faith. So there's not a great amount of underlying relationship here of goodwill. Everyone's sort of sitting there in an environment saying we're not quite sure that we can trust the other side. And when you have a deficit of trust, these things tend to get done with deals, and deals start with handshakes. And you need to understand that whoever you're handshaking with is going to be good on their word. I don't think that Democrats think that they can count on the White House to be good on their word. They don't count on Republicans to have the votes to be good on their words. And Republicans at the same time don't think they can count on Democrats either. So it puts us in a very big difficulty just trying to get to an exit if one were available to be taken.
Right, the lack of trust shaping developments in D.C. Derek, thanks so much for walking us through all this. Bloomberg senior editor Derek Wallbank. We also have some morning calls ahead of the Asia trading day. PIMCO CEO Emmanuel Roman warns that the full impact of President Trump's tariff policies are yet to be seen, and that may weigh down prospects for the U.S. stock market. He says while there are bright spots in the economy, such as the data center boom, he also thinks that outside hyperscalers, quote, life in industrial America isn't great. PIMCO expects the U.S. stock market to return about 6% over the next 3 years. Meanwhile, Goldman is more bullish on the asset class. It's turned overweight on global stocks over a 3-month horizon. They see the rally extending into the year end, given a resilient U.S. economy, supportive valuations, and a dovish pivot from the Fed. Goldman notes the asset class typically performed well in late cycle economic slowdowns when policy support was strong, Shery.
And here are some of the other stories that we're following at the moment. The U.S. Department of Health and Human Services referring Harvard University for administrative suspension and debarment proceedings. The move could exclude the school from entering into contracts with all government agencies or receiving any federal funding. It also comes after officials informed the university of its findings that Harvard acted with indifference toward allegations of campus anti-Semitism. President Trump says he will levy new duties to boost the domestic furniture and film industries. Trump on social media stated that he would be imposing substantial tariffs on any country that does not make its furniture in the U.S. It's unclear how that would work since companies, not countries, manufacture furniture. Trump also reiterated his threat to impose a 100% levy on any and all movies that are made outside of the United States. And one stock that we could be watching today for any moves would be Sony. Of course, they are big in the movie industry, but also we had seen Sony Financial Group surging in their Tokyo debut on Monday, and this spin-off listing really seen as a test of how companies can improve valuations. So we'll be watching Sony Group at the open. We have more ahead on the Asia trade. This is Bloomberg. The Reserve Bank of Australia expected to hold today when it makes its decision this afternoon following a rebound in inflation last month. Bloomberg's Paul Allen joins us now with the latest. Paul, so if it's a hold today, when could we expect the RBA to move?
Yeah, that's a difficult question. It could be November, but probably not. We might be looking early 2026 at this rate. I mean, the reason being, as you mentioned there, headline inflation did rebound in August a lot more than expected, got back up to 3%, which is the top end of the 2 to 3% target range for the RBA. The trimmed mean is the one that the RBA really watches. That stayed put in August, but it also suggests that the bank would probably prefer to remain where it is until we get quarterly inflation data, and that comes out at the end of October, which suggests, well, maybe the November meeting is a live one, but then again, maybe not, because all of it underscores the whole problem around this last mile of inflation, how sticky it is, how difficult it is to get inflation under control, particularly in this uncertain tariff environment. And the RBA's already shown us no tremendous rush. We've had 3 rate cuts this year. It was February, May, and August, so there is a willingness to be patient. And in the meantime, the jobs market's looking pretty stable, and also there's this awareness that every time the RBA does cut rates, it's typically off to the races again for Australia's red-hot property market.
Yeah, so beyond this meeting, later in the year, or perhaps even next year when we see a cut, we could actually see ensuing hold for a long time. Paul, thank you so much. Paul Allen in Sydney setting us up for the RBA decision. Now, also in Australia, pressure is mounting on Optus and its parent firm SingTel after yet another emergency call outage in Australia over the weekend. That incident comes after a September 18th outage that disrupted emergency call services nationwide. Bloomberg's global business editor Karen Lee joins us now. So, Karen, what's the latest with these Optus outages?
Well, this is really turning out to be a bit of a reputational crisis for Optus that they're struggling to contain. And at the moment, the latest has come at probably the worst time it could for Optus. It came as the SingTel CEO is here in Australia this week, having been summoned for a meeting by Communications Minister Annika Wells. The head of Optus will be there as well. And now the latest outage was small. It only impacted about 4,500 people. Nobody died as a result. But the one earlier this month, there were 4 fatalities, and these two together are really helping foment anger in Australia about what's going on with Optus's network and why emergency services in particular have failed. And this distrust could now risk Optus losing some customers to other rivals who haven't had these issues. And they're working really hard to try and combat this, including by being quite transparent and giving a pretty decent amount of information to the public. But at this point, it is something that they're trying to figure out.
In the meantime, what does it all mean for SingTel?
Well, just look at how big Optus is for SingTel. It gets 50% of its revenue from Optus, which is now facing likely fines from both of these outages. And there's also been questions here in Australia in the last couple of weeks about whether Optus and SingTel have invested enough in the Australian network and its infrastructure. And at the same time, last year there were some reports that came out about whether SingTel would sell Optus. They have denied those, so we're not expecting anything like that. But we are watching to see what the result is of this meeting and how it could change things going forward.
Karen Leo, our global business leader there, joining us from Sydney. Other corporate stories that we're following at the moment, Jefferies Financial Group has posted its best fiscal third quarter revenue ever, with total revenue jumping almost 22% to over $2 billion. The company attributes the strong numbers to what it describes as a strengthening environment for deal making and trading activity across the globe. Jefferies executives have also expressed optimism about the company's near and long-term outlook. Google has agreed to pay $24.5 million to resolve President Trump's claims that being banished from his YouTube channel was illegal censorship. $22 million of the settlement will go toward the construction of a new ballroom in the White House, while the remainder is going to other plaintiffs who joined Trump in the legal action. YouTube in 2023 lifted restrictions it had placed on Trump's account after a 2-year ban triggered by the January 6th riot.
To a Bloomberg scoop now, Chinese tech giant Huawei is set to rapidly ramp up production of its most advanced AI chip over the next year. And this comes as Nvidia grapples with intensifying geopolitical pressure on the mainland market. For more, let's bring in our Asia tech correspondent, Annabelle Jolis, in Hong Kong for us. Belle, this is our exclusive reporting, perhaps also much anticipated. What have we learned so far?
Yeah, really great coverage from our colleague Gao Yan over in Singapore, but it does relate to the Huawei Ascend chip series. Now, the Ascend chip series, it's essentially the company's dedicated line of AI chips or accelerators or processors, and ones that have been designed specifically for AI workloads. So what we've learned is that Huawei is looking to massively ramp up production of the 910C chip. You can see here in 2025, 300 to 350,000 different units. By 2026, what we're hearing from sources is that they want to have that at 600,000. So if they are able to do that, it really does represent a very major feat for the business because, of course, Huawei has really labored under US sanctions, multiple different layers of sanctions and restrictions over the course of 2025. So it tells you that they're managing to actually find some pretty significant workarounds or technical workarounds to those restrictions that are in place. Overall, the Ascend chip series is looking to hit 1.6 million dies next year. So very interesting moment to consider when you take a look at how Nvidia is faring in the country and the pressure it's faced, or Chinese companies have faced pressure from Beijing to not purchase Nvidia products. Huawei is definitely leading the wave of chip firms that are racing to try and plug that short gap.
And it's also been improving output in recent months.
Yeah, that's what we as well have heard from sources, that even over the summer they've been able to, again, yes, improve that production quality, because that has been one of the sort of concerns with Chinese chips that face a lot of restrictions in terms of the machines that they can access. EUV, for instance, or extreme EUV machines, they're totally locked out from those. So they do face a range of different technical issues, but it does tell you, or we're hearing, that Huawei is finding ways to work around that. And we actually saw the signs of that really back in September, because Huawei took a very unusual step of publicly unveiling its 3-year vision for eroding Nvidia's dominance in the country. And that was really a break in tradition for the company that's typically flown or wanted to fly a little bit more under the radar. You can see here some of the reaction we've got from Bloomberg Intelligence so far, and they're saying that if this report is confirmed and Huawei actually is able as well to increase that production, it certainly does help ease the bottleneck that you see for Alibaba, Tencent and Baidu as well.
And meanwhile, Washington heaping pressure on Taiwan to move more chip production to the U.S. What are the details on that?
Yeah, so this has been an ongoing sort of tussle, I guess you could say, between the US and Taiwan. The US certainly wants Taiwan to move more of its production to the States. Taiwan has been ramping up some of its production there. It's sort of so far kept its most advanced production still on the island. But what we heard from the Commerce Secretary, Howard Lutnick, in a recent interview on News Nation, is that they want as much as 50% of Taiwanese chip production happening in the States. That would be a huge change from where we are today. But the way that Taiwan, or the US rather, is sort of framing this as well, is that it is the only course forward for Taiwan to maintain its security as well, given you've got that persistent risk of China, who's made it very clear that they do plan to take Taiwan, even if that means by force. And just yesterday, for instance, we had very interesting sort of movement in terms of China possibly pushing the US to oppose Taiwan independence. So again, in the context of that from China yesterday, and then hearing this today, it's certainly, it seems to be the way that relationship is progressing. Quite a lot of tension between the US and China on this issue, but Taiwan clearly is being asked to move, as we said, more production to the US.
Yeah, we'll be watching TSMC at the Open later in Taiwan. Annabelle Jewelers with the latest there on, of course, all of those moves on tech. We have more ahead. This is Bloomberg. We have breaking news out of Japan. We are getting August industrial production numbers. Contraction month-on-month, 1.2% for the preliminary numbers, which is a little bit larger than expected. Year-on-year is also a contraction that missed to the downside, 1.3%. We were expecting the slowdown in industrial output, given that we're seeing this pullback from front-loading ahead of U.S. tariffs, and these numbers are for the month of August. Also a contraction on retail sales, year-on-year contraction of 1.1%, month-on-month also 1.1%. Of course, Japanese households continue to contend with high inflation, surpassing that 2% BOJ target for the last 3 months. And of course, the question right now is what businesses will do. We are getting the Tankan survey later in the week, which will give us indications of where the Bank of Japan is headed.
And whether that October rate hike might still be on the table. But Shery, also in Japan this week, we've been tracking Sony Financial after its share surge in its Tokyo debut on Monday. And this is, of course, Japan's first direct listing in more than 2 decades. So investors carefully watching this. They see this as a rare test of how local companies can improve valuations by spinning off their businesses. Let's bring in Bloomberg Intelligence Senior Analyst Stephen Lam. So, Stephen, the hope is that this helps the better pricing multiples, but for the life insurance side of the business, potentially at risk from higher rates. Net-net, where do you see this going?
Yeah, Avril, I think what's interesting about this company is that, like you said, it is houses within the Sony Corporation group umbrella. So they have been enjoying a lot of the brand value, and I think the point about the Japanese JGB yield is that compared to when they went privatized about 5 years ago, the yield environment has actually improved quite a lot. So as a life insurance companies, at any given day, they actually rather to have a higher yield or positive yield environment. The issue with the yield situation is the pace of the increase. It was so fast that it caused some of the policyholders surrender the policy and switch over to higher yield policies. So the way we feel about this company is that it has a pretty decent sort of agency sales force, life planners they call it, and a combination with all they call the agency supporters. So this sort of combination really helps them to sell and penetrate into a wide variety of clients, such as some of the high net worths or some of the younger households.
So what are the expectations for the business, and could we potentially see more of these sort of restructurings and spin-offs among Japanese corporates, given, of course, the upside that you mentioned?
Yeah, Shery, I think, I can't really speak on behalf of the whole the broader Japanese market context, but, as far as, the insurance or the financial industry is concerned, we believe that, we've actually seen a lot of the works have been done in terms of the corporate governance, such as selling down strategic holding assets, strategic holding stocks, for example, improving their shareholder return, right, by pushing it up to, more than price to book of 1 times. So a lot of the companies are actually either on the way or have already achieved that. If you look at going back to the Sony Financial case, right, the expected total return yield that we're looking at right now is anywhere between 5 to 7%, which, from an Asia Pacific standpoint, is a very attractive level, yeah.
Stephen, thank you so much. Bloomberg Intelligence Senior Analyst Stephen Lam. Now, we also had the summary of opinions from the BOJ's September meeting. This was, of course, the one that had 2 dissenters. It's interesting, Shery, because the comments that we're getting from these board members does seem to be a bit more cautious. One of them talking about the need to support the economy for now, or another that there's an appropriate stance to maintain policy for the time being, at least. Shery.
Yeah, and that they should avoid the hike now to prevent market surprise. So a little bit dovish there. Not too late to decide on rates after checking data. But you said it. I mean, there were 2 dissenters at the latest meeting, right? Which gives you an indication perhaps of where they might be going from here. One BOJ member saying that they need to weigh up risks of waiting as well. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. We do have a rate decision from the RBA today, but we're also watching some looming risks ahead, including, of course, a potential government shutdown in the U.S., not to mention ongoing tariff threats coming from President Trump, from everything in furniture to films.
Yeah, I think 12 p.m. tomorrow, Hong Kong time, is the window to watch, given how the shutdown looms, along with some of these tariffs that could be in play as well, Shery.
Yeah, we have actually seen already the markets react with treasuries rallying on that safe haven demand. We'll be watching JGBs as well today, given that we're getting the latest summary of opinions coming from the latest Bank of Japan meeting. And we've had both dovish and hawkish commentary. One BOJ member saying that they need to weigh up the risks of waiting for the next rate hike. Another member also saying that they should avoid a hike now in order to prevent market surprises. Remember, the BOJ left the rate steady on its last meeting, moving. But now the expectation is that potentially they could move in October, especially given what we heard from Noguchi, who's a Bank of Japan board member that has been perceived as dovish, and now coming out and indicating the rising need of rate hikes, which is why we saw the Japanese yen strengthen towards that 148 level against the U.S. dollar in the last session. We're still holding a little bit of those gains and a little bit weaker against the greenback. But take a look at the Nikkei as well, not doing much right now after falling from those record highs. And JGBs are very important today because of the BOJ summary of opinions, but also because we do have a 2-year auction. Not to mention that I also talked about that Treasury rally, not to mention the UK bond rally that we also saw before that, given fiscal concerns over there. Take a look at how the Korean market is also opening, because we saw a little bit of a rebound on the Kospi in the previous session. We're talking about the best day in more than 2 weeks. We continue to see a little bit of those gains on the Kosdaq and the Korean won holding that 1400 level. We have seen a lot of weakness on the Korean won against the U.S. dollar, a lot of idiosyncratic news, including, of course, concerns about the trade deal with Washington.
Yeah, Shery, take a look as well at how oil prices are faring. Overall, they have been snapping their winning streak with the expectations of more supply coming from OPEC Plus producers coming online later in the year. And aside from that, that also influences some of the stocks we watch in Australia, the energy as well as gold miners after gold hit those yet more record highs. The RBA decision is also due today, but for the Aussie versus the greenback, I think the considerations are more on the dollar side of that pairing, given how the U.S. shutdown risks loom. That seems to mean the path of least resistance is going to be for lower yields in the U.S. What does that mean for the greenback overall? So that is also at play in the session, Shery.
Yeah, let's actually bring in Katy Kaminski, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. And Katy, great to have you with us. Avril just was mentioning what the dollar is doing. And of course, we saw the downside pressure. Given that yields are lower, we continue to see the safe haven demand. How big of a deal is the potential government shutdown and just all the ongoing tariff news coming from the Trump administration?
Well, this is a good question because right now you haven't seen a big reaction yet to the potential for a shutdown. I think the dollar has been much more focused on distilling rate cuts expectations as well as trying to understand recent very strong GDP numbers last week. So in general, I think it's a risk that it could move on that, but still the market hasn't reacted as of yet on shutdown worries.
What are you expecting to move the markets across Asia, keeping in mind that we have PMI numbers out of China, we have the RBA rate decision as well?
Oh, this is a good question because I think some of the interesting news has been sort of uptick in inflation in Australia. It's also been sort of a focus on the BOJ. So I think any sort of inflation surprises or any weakness that you could see that could potentially suggest that there might be more cutting of rates could be interesting to follow. But the general theme in Asia has been very positive and very focused on equities being strong, not across the board, but in many different areas.
What specific areas are you constructive on, Katy?
So where we're seeing the strongest signals are clearly Japan has been very strong, as well as Hong Kong. You're also seeing some momentum as well in China over recent news. So you're really seeing some opportunities, particularly for equity investors that may not want to miss out on what has been a very positive September and continuing to be so even this week as well. So I'd say that it's really an equity theme, but of course in commodities and other related assets, those have also been interesting if you look at places like gold. But some of the other commodities like the metals may be more susceptible to some of the tariff news that we're kind of anticipating as well.
Do you expect an extent of outperformance for markets that are perhaps more commodities heavy then?
Well, it's possible that may result in some initial noise at first, but I think that, as some of the tariff headline, the despair that we've kind of seen this summer and sort of people being very concerned about that headline risk, we have sort of gone past some of the peak uncertainty for tariffs. I think there's still a big issue, but they're not moving the markets as much as they were before. So commodities will be a key focus, especially if inflation is important going forward.
Commodities heavy, the Australian market, and of course I mentioned the RBA rate decision as well. Is there anything specific that you're watching there?
Yes, Australia has behaved somewhat differently this month. I think some of the surprise upticks in inflation definitely rattled the market some as well. But you also have seen that the Australian stock market has also lagged, particularly the Asia region. So I think that's one to watch to see if this sustains or if it can sort of catch up with other regions nearby. So that has been an outlier along with India as well this month.
Artificial intelligence, of course, an ongoing booster of all markets and all boats at this point. China has some big names and also some advancements when it comes to some semiconductor names as well. Anything in particular there?
Well, I think the interesting point has been that there is, in some sense, many investors not wanting to miss out on this particular move. And I think although there was some uncertainty earlier, it's definitely been the biggest wave to follow this month. So I think a lot of investors are weighing the risks and considering the potential for opportunity of missing out in the AI theme, particularly in places where there's a higher concentration in AI exposure. So you've definitely seen that somewhat in China. You're also seeing that in Hong Kong, as those are some of the bigger winners across different equity markets.
Katy, thank you for your analysis. Katy Kaminski is Chief Research Strategist at AlphaSimplex Group. Now let's take a look at how some of the gold miners in Australia are faring. And aside from these names, of course, we're going to be watching the trading debut of Zijin gold. But for the moment, given how the commodity, the precious metal, has just been hitting yet more record highs, you have the risk from the U.S. government shutdown, the Federal Reserve's path towards rate cuts at play as well. That is really underpinning these names that you're seeing in the Australian markets as well, Shery.
And also we're following some of those commodities names, especially energy stocks across Asia, given that we continue to see that downside pressure on oil prices. Signs that OPEC Plus will hike production again in November, leading to Brent to continue to fall at the moment. We're talking below that $70 a barrel level. And of course, the fact that we do have geopolitical tensions between Russia and Ukraine, but on the other side, potentially the end of hostilities in Gaza with President Trump's 20-point plan to end the war there, also really pressuring prices on the other side. We have more ahead on the Asia trade. This is Bloomberg. President Trump and Israeli Prime Minister Benjamin Netanyahu have agreed to a 20-point plan designed to end the war in Gaza. But it's unclear if Hamas will accept the proposal, which calls for the group to relinquish control of Gaza and release all hostages.
I also want to thank Prime Minister Netanyahu for agreeing to the plan. If accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours.
Let's bring in Bloomberg's Michael Heath. And Mike, President Trump said it, if accepted by Hamas, how feasible is this plan?
Yeah, it's an interesting question because Hamas obviously hasn't really been part of this process. Some of the countries that have been close to it, such as Qatar and Egypt as well, have been engaged with the US in that. So whether those countries can put some pressure on Hamas or just how it sort of assesses its situation, I guess, is the key question here. In a sense, I mean, it's an ambitious plan, but it's sort of a synthesis of plans that have been put forward over the past year or two. So there's probably not a huge amount new there. What's probably appealing to Hamas in some way is, as President Trump mentioned, the 48 hostages are due to be released. 20 of them are believed to be still alive. And then Israel would release 250 Palestinian prisoners who have life sentences, and then 1,700 other people who've been detained during the war. Now, releasing those 250 people with life sentences, that would be attractive to Hamas. And there's also the option of if Hamas fighters want to basically agree to give up their radicalism and all these sorts of things, that they can remain as part of Gaza's society there, or they can leave the region as well. So there's an out for them. And we have to remember a lot of the leadership of Hamas has been killed too. So whether any of these things appeal to the group, I mean, it's just hard to know. They haven't been, particularly forthcoming before, because their basic demand is that Israel must withdraw from Gaza, and the 20-point plan sort of fudges that a little bit about how that will work. So I suspect Hamas will want more detail on that, and that may be the sticking point for them.
We're also watching to see if this in any way paves the way for a form of a two-state solution, which is not part of the language in this plan.
Yeah, well, I mean, look, there is talk right at the end of it that if all of these various things happen, and there is a lot that needs to happen. I mean, there's a technocratic Palestinian group that would oversee running of Gaza, and that would be then in turn overseen by a board of peace chaired by President Trump. The Palestinian Authority would need to reform, which has been talked about for a long time, and eventually that would be handed over to them, and de-radicalisation occur. And after a number of steps, there is talk that perhaps they're on the path to statehood. Now, Israel fundamentally opposes that now. It did once agree to that, but the right-wing government in Israel now just has no truck with that. So, when I mentioned this sort of fudging that's going on there's a lot of positions where you could see both sides, balking at proceeding further with the agreement. But even the potential, if you get the hostages out and release those Palestinians and perhaps get some sort of ceasefire, that would be a lot of progress. But if this deal came to pass, it would really be quite something substantial for President Trump, very substantial, in fact.
Michael, great to get your insights. Thanks so much. Bloomberg's Michael Heath. Now, the other story we've been tracking, the odds of a U.S. government shutdown. The U.S. Vice President J.D. Vance says that the government is on track for one after a bipartisan meeting failed to reach an agreement.
Whatever our disagreements are, let's negotiate with them. Let's talk about them. Let's figure out a bipartisan solution, but you don't shut the government down. In other words, you don't put a gun to the American people's head and say, unless you do exactly what the Senate and House Democrats want you to do, we're going to shut down your government. That's exactly what they're proposing out there.
Bloomberg senior editor Derek Wallbank joins us now. So, Derek, there is a lot at stake here, including crucial jobs data at the end of the week if this U.S. government shutdown does indeed materialize. Talk us through the considerations here.
Well, Avril, the considerations are pretty straightforward at this point. We are a little bit more than 24 hours away from a government shutdown in the U.S. That's because the deadline for funding the government is coming up. That is midnight, end of September into October 1 Washington time, so noon Hong Kong on October the 1st. And quite simply, Republicans need Democratic votes. Right now, they need about 7 more Democratic votes than they currently have in the Senate, and they are not particularly close to getting those. What you need on the Democratic side, Democrats have said they want some commitment on health care. There are health care subsidies that are due to expire that will spike the cost of health insurance for a good number of people. And that is the critical Democratic ask right now. At the same point, Republicans have said that the House has passed a clean stopgap spending bill that would go into, I believe, November, and they're basically saying, look, Democrats shouldn't hold the government hostage to get a policy aim that they cannot otherwise get the votes for. Now, we've seen this playbook before, if you go back a fair amount of time, except that the shoes were on the other feet. Republicans trying to make healthcare policy changes they couldn't make otherwise. Democrats saying no. That one launched into the longest government shutdown in modern history and left Republicans who are seeking policy changes to eventually limp out of it, open the government in exchange for absolutely nothing, and fold and lose. But at the same point, ginning up their base sufficiently that the next year in the midterm elections, they went and won them. So a lot of lessons to come out of this. Government shutdowns do tend to start at a sort of moderate pain intensity and get worse over time as progressively things start to shut down and people start to feel the impacts of those losses.
Yeah, tell us a little bit about what we should be watching out for in the next couple of weeks, given that we tend to do this every year, right? But just remind us, what are some of the implications of a shutdown, especially when it comes to furloughs and layoffs?
Well, Shery, I have a fiscal New Year baby in my house, and my daughter turns 13 on October 1, and we've learned in our house to not plan the birthday parties for around that time. We always go a little earlier, a little later. But, it starts out really simply. You start with federal lands closing, so national parks, the gates may shut on some of those. You do get workers who are deemed as non-essential who get laid off. That might be somewhere in the ballpark of maybe 40% of the federal government. Those workers go home. They stop doing things. There's a period of time when they sort of bring their agency's work down to a pause. Eventually, most of those folks get hired back, and then you start going forward. Now, government workers who are essential, you think your military and things like that, they don't get paid, and at some point, you start putting a lot of financial stress on every single federal employee. You start getting things like government statistics that don't come out, and all of these little bitty things that just sort of continue to sort of make the wheels on the bus of the nation go round and round, that just grind to a halt. And eventually, as I say, that severity adds over time to eventually get to a political pressure. Now, one of the keys is who gets blamed for that. Polls that I've seen right now are suggesting that might be an even split. Maybe Republicans get a little bit more blame, but Democrats historically have been the party of that has embraced the idea of good government. And you see even that government workers tend to be predominantly Democratic, certainly in Northern Virginia and Southern Maryland and in the District of Columbia, very Democratic hotspots. And so there are a lot of Democratic voters who stand to endure quite a lot of pain if this goes, not to mention that the Trump administration has not executed, but has threatened the idea that some of these workers could be not just furloughed or laid off, but fired entirely if this continues. So there's a lot more at stake than maybe there would be in other government showdowns.
Right. Derek Wallbank, thank you. Always great to have you with us. And do make sure to say happy birthday to your fiscal New Year baby this year. Bloomberg senior editor right there with what to expect from a potential government shutdown in the U.S. We have more ahead. This is Bloomberg. Take a look at how Japanese assets are trading, with the Nikkei falling for a third consecutive session, being led lower by energy stocks. Of course, we continue to see oil under pressure on those production expectations coming from that OPEC Plus meeting. We're also watching a 2-year JGB auction today. We had the Bank of Japan's summary of opinions coming out with one BOJ member seeing upside price risks large, and one BOJ member saying that they need to weigh up the risks of waiting for another rate hike, but that also that they should avoid a hike now in order to prevent market surprises. So we are continuing to parse through those comments with the expectation perhaps that we could see a hike in the meeting in October, especially Avril, as we got that commentary from a BOJ board member that so far had been perceived as dovish, now pointing to the rising need for an interest rate hike.
Absolutely. So let's bring in our Bloomberg FX and rate strategist, David Finity, on this. You're just hearing from Shery outlining the summary of opinions. And then you also have someone who is seen as dovish, sounding a bit hawkish, but does this move the needle on the yen?
It hasn't moved the needle yet in terms of the yen. So I think, and the variety of reasons for that, one is because the carry is still good. I mean, the BOJ decision's not until the end of the month. So if you're a real money fund, you're going, I still like the carry. You've obviously still got uncertainty over the US government shutdown and the payroll number if it's released. I say if it's released because if the government does have the shutdown, then basically, the number will be deferred till later in the month. So there is plenty of uncertainty at the moment, but the market pricing is certainly beginning to veer towards a BOJ rate hike at the end of this month. And now it's up to about 70%. So a quarter point's not fully priced in until the start of basic Q1, but I think we have real labour data coming out next week. If that comes in aggressive, and let's see what the result of the LDP election is, then I think if you get more hawkish rhetoric out of the BOJ, they are certainly signalling, the market can't say they haven't signalled this time, that a rate hike is definitely on the table, potentially in October.
David, it's been really interesting to see the BOJ, the Japanese yen moves, because despite the commentary from the BOJ board member, I mean, the upside was really capped. And we're now hearing from Citi that given the Japanese leadership election that we do have, regardless of the outcome, that will actually put pressure more on the yen towards 150.
Yeah, it may do. I think if you're looking at what's going on with dollar yen, basically you've been in a range-bound territory of 145 to 150, and within that really 146 to 149 for the last couple of months. I mean, we did approach 150 very recently. Obviously, we can back down to 149. So it's a bit of a tug of war going on, if we're honest. And you do have a split opinion going on. I think if you look at the real money funds, they're quite happy to be long this with a carry trade involved. Hedge funds are a bit split all over the side. From talking to my contacts, some are going, okay, we think dollar yen could go higher. Others are going, look, we think dollar yen's going lower. So there's no real conviction, is what I'm trying to say, on where it's going at the moment. That can change. And without that conviction, it's dollar yen really hasn't gone anywhere. So we'll see what the LDP election is. I think the key thing focus on that is, does it impact BOJ? But Katy, who was one of the more she was perceived as dovish, did come out recently and say, look, at the end of the day, let BOJ does what it does, as long as any rate hikes aren't aggressive. So she's sort of taking a more stance away from the easing policy, or from a dovish policy, shall we say. So I think it is up to the BOJ. But I said, remember, that's only one side of the equation. You do have the US side of the equation as well. And look, if we avoid a government shutdown, and that's an if, even if it's one, how long is it? If it's short and we get the data, then that's it.
Well, David, because then that begs the question, is just about the greenback side of the equation, especially when we look at the RBA decision that's coming in later today. Really interesting to tap all these FX moves. Bloomberg FX strategist David Finity for us. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Kioxia shares are trading in the Japanese session. We're talking about record highs for this company. As with SanDisk, they started operations of their Fab 2 semiconductor factory at the Kitakami plant in Japan's Iwate prefecture. They are now seeing meaningful output beginning in the first half of 2026. And of course, really the race globally in order to own a bigger share of the semiconductor market really continues. And we're now told that Chinese tech giant Huawei is set to rapidly ramp up production of its most advanced AI chip over the next year as well. This comes as Nvidia grapples with intensifying geopolitical pressure in the mainland market. For more, let's bring in our Asia tech correspondent Annabelle Drulers in Hong Kong. Annabelle, what do we know so far?
Yeah, well, what we know so far is that Huawei is looking to rapidly scale up its production. So this is very great reporting, actually, from our colleague Gao Yan over in Singapore. But essentially, it relates to the Huawei Ascend chip series. Now, the Ascend chip series is a series of AI chips that are specifically designed for AI workloads. And what we hear from sources is that Huawei is looking to ramp up production of a specific chip. This is the 910C Ascend chip into 2026 to around 600,000 units. So this year you're around 300 to 350,000. By next year up to 600,000. If they can achieve that level, it's really a massive milestone for the company, because we have seen Huawei facing a range of different sanctions, different restrictions on the business as well. And it tells us that maybe Huawei, its main manufacturing partner, SMIC, are managing to find workarounds to those restrictions. And a very interesting point for the company as well, given that you've got Nvidia that's continually being restricted in China by government officials who are telling or encouraging companies not to use Nvidia products. Certainly Huawei is looking to try and fill at least part of that gap.
It's also been able to improve output in recent months, Belle.
Yeah, this has been sort of a persistent issue for Chinese chip makers as a whole. There's a couple of key different areas where they really face challenges. Firstly, they have issues from the equipment side, so they're missing the extreme EUV machines, which are critical for production, and so they have to find workarounds to that. There's HBM short gaps as well, so different challenges that the business faces, and that really then has an impact on the yield, how many chips are produced to maximum efficiency, how many have defects, for instance. But what we're hearing is that really even over recent months, Huawei has been able to improve its yield, improve its production as well. And you've seen sort of the company as well publicly indicating that, because just back in September, the company took the very unusual step of outlining a 3-year plan to really challenge Nvidia's market dominance, and that was a real break in tradition for the business as well. We've got some reaction to this from our Bloomberg intelligence team, and they're certainly saying that if Huawei is able to scale up production, it would be a benefit to companies like Alibaba, for instance, others that are also facing challenges with access to chips, Tencent, Baidu. I mean, some of those companies are going in-house as well with their efforts. But Huawei can't manage to meet China's overall chip demand, of course, because Bloomberg intelligence says that they need 2.7 million units just for this year, and we're looking at 1.6 million dies from Huawei for next year.
And with this global tech race continuing, Washington now is applying pressure on Taiwan to move more chip production to the U.S. What do we know?
Yeah, this is information that came out during an interview that Howard Lutnick, the U.S. Commerce Secretary, did with local media in the U.S. But the key takeaway from this is that the U.S. is applying further pressure on Taiwan, it seems, to move more production capacity to the States. So this has been an ongoing issue that we've seen, and we have seen Taiwanese companies looking to expand their production to the U.S. to some degree. They haven't moved their most advanced production lines there, but still they are adding more facilities. TSMC really leading the charge on that front. But what we heard from that interview, or during that interview with Howard Lutnick, is that essentially the US is looking for Taiwan to manufacture half of the demand for the US within the US. They haven't actually elaborated, or Howard Lutnick didn't elaborate on the steps that they would take to convince Taiwan to move so much production there, but it does come against a very interesting and developing geopolitical backdrop, because just yesterday, for instance, we heard that President Xi would be pushing President Trump to oppose Taiwan independence. That would be a major shift, and the way that the US is framing this is also tied to national security concerns for Taiwan and ways that it can also defend itself against that eventual takeover risk from mainland China.
Annabelle draws for us there. Some other top corporate headlines we're tracking as well. DeepSeek has updated an experimental AI model, calling it a step toward next generation AI. The latest version of its platform introduces a new technique called DeepSeek Sparse Attention that's designed to explore and optimize AI training and operation. DeepSeek is also halving its prices on its software tools, joining other Chinese startups in slashing costs to attract users. Chinese tech giant Xiaomi is confident that its new iPhone rival will exceed the sales of its previous model. The firm says the phone saw record demand immediately after its debut last Saturday. The company's president says the most expensive variant of the new 17 family, the Pro Max, was the top seller, followed by the Pro. Xiaomi last week unveiled the new devices to challenge Apple's iPhone 17, touting cheaper prices and upgraded cameras.
Now, Zijin Gold is set to make its trading debut in Hong Kong in the next hour. It comes after the international arm of China's biggest miner raised $3.2 billion in the world's largest IPO since May. Our China correspondent Ming Lo joins us now from Hong Kong. So how's demand looking like?
Yeah, demand is very strong. As you said, this is a highly anticipated IPO, the largest one since SingTel listed in May, and the room here is filling up. You can hear the noise level just dialing up. In the grey market, the share prices had surged as much as 56%. It was 240 times oversubscribed for the retail portion of the share offering. And the company has also managed to secure a pretty strong lineup of institutional investors, including, for example, the Singapore Sovereign Wealth Fund GIC, as well as Hill House Investment, BlackRock, Fidelity, for example. And this very strong lineup of high caliber funds buying into the stock really is going to solidify Hong Kong's standing as the largest IPO market this year for the first time since 2019.
Min Min, what's driving the strong interest in Zijin Gold? I mean, we know how gold prices have really been undermining, or underpinning, I should say, some of these gold mining stocks.
Yes, you're absolutely right. You've got to think about the macro environment and how gold prices has surged about 40% year to date so far. And that really provided a tailwind for many of these mining stocks, including the parent company, Zijin Mining, which saw its share prices up by about 120% or so year to date so far. And it helps that the offer price at the today at 79 or 70 over Hong Kong dollars a piece is about 20% cheaper compared to the average of major gold miners that are listed these days. At the same time, our Bloomberg analyst has said that Zijin Gold has a strong track record of identifying high-performing mines at a relatively cheap price. In fact, about a third lower than industry average in the 5 years leading up to 2024. And you add to that, there is still belief that gold prices has more room to run on the back of central bank buying, concerns of a Fed independence, all of that really contributing to the strong interest for Zijin Gold.
So what are we expecting Zijin Gold to do with the funds?
Yes, Zijin Gold is planning to use those funds to expand overseas investments, including to settle the acquisition of a gold mine in Kazakhstan, also to help construct and upgrade existing mines over the next 5 years, because we know the company, as you can see on this chart, it is pledging or setting a target to increase its capacity by about 40 to 50% over the next 5 years from 2024 to 2028. And you can see on this chart, last year it's looking at just under 80 tons a year, and it's looking at as much as 110 tons of production by 2028, which is a pretty ambitious goal there.
Min Min, thank you so much. Bloomberg China correspondent Min Lo for us there, ahead of the trading debut for Zijin Gold. We'll have more ahead on the Asia trade. This is Bloomberg. A new space innovation institute was launched in Australia this morning. It's aimed at boosting research and development, as well as leveraging space technology to lift the country's sagging productivity. Bloomberg's Paul Allen joins us now. Paul, what's this expected to do for the Australian space industry?
Avril, in short, hopefully increase its size. It's one of the goals of the government to triple the size of the Australian space industry by 2030, coming off, admittedly, what might be a fairly low base. So this was announced today. The Australasian Space Innovation Institute announced at the International Aeronautical Congress, which is a major space conference which is taking place in Sydney starting from today. So this is an independent body. It's a not-for-profit. Its purpose is to link research and development and end users and industry industry as well, also improve Australia's sovereign capability and leverage some of the space technology and defence and national security as well. And part of the goal here is also to reduce Australia's dependence on foreign data and satellites. There's already an example of this underway. The Takahe project with New Zealand would look to advance maritime security and improve responses to illegal fishing, natural disasters and security risks as well. Now, the word Australasian is an interesting one, and the participation of New Zealand interesting too, because you see there on the screen the first test launch of the Gilmore space rocket earlier this year. Flew only for a few seconds before exploding. That's not uncommon. Space launches are notoriously difficult to achieve, but you compare that with New Zealand, a far smaller country. It's been its own homegrown rocket lab, which is listed in the US, has been successfully launching rockets for quite some time now. Anyway, let's talk about the Institute a little bit more, because we're joined by the CEO of the Australasian Space Innovation Institute, Professor Andy Koronios. Professor, thanks so much for joining us today. I do want to start with that perception. Is it fair or otherwise to describe Australia's space industry as nascent or lagging in some respects? How does it compare to other developed nations?
As a percentage of GDP, it's actually not that far behind, but it can do better. The Australian space industry in the last 6 years has been growing dramatically from a very low base, of course. But we believe that through the innovation system, and we have world-class universities, we have world-class research centers, and what this institute will do is basically connect all of those to industry as well as the end users, because we feel that space is not only about lifting the productivity of a sector like the space industry, but it actually underpins the productivity of every other industry. And as you know, we are very big in agriculture, we're very big in mining. We want to make sure that our farmers can grow more for less using space as well as space data as well as new AI techniques. But also our miners, we want to do mining far smarter than we do at the moment, as well as more safely, more sustainably, as well as many other applications. As you've mentioned, the Takahe mission with New Zealand is about maritime monitoring. We have, between New Zealand and Australia, we actually have responsibility for 16% of the globe. Our economic exclusion zones are huge. Using just ships and aeroplanes costs us billions every year, and of course they have a lot of blind spots because they cannot cover all of those vast areas. Using radar satellites, you can actually monitor, particularly constellations of satellites. You can monitor vessels, the vessel movements from space, day or night, cloud or clear, and therefore you are able to save money, but also be able to really safeguard our sovereignty as well as our national interests like fishing rights and so on. At the same time, of course, being able to monitor and track illegal activities.
Yeah, well, the potential and end uses are fairly clear, but how big is the gap between ideas and reality at the moment, and what can your institute do to close that gap?
It's a fair question. However, we have already been working through another program for the last 6.5 years, the SmartSat Cooperative Research Centre, funded by the Australian government. And we have done quite a lot of work in that. We've brought together more than 150 organizations and developed more than 200 projects, developed a lot of technologies. And what we're aiming to do now is to actually stitch all of those technologies together, connect the activities, and build AI-enabled systems, AI-enabled applications, because we feel that that is one of the biggest opportunity for Australia to play, much more so than manufacturing satellites, for instance.
You talked there about weaving in AI to these technologies. What are you seeing in terms of the competition for talent in shaping the Australian space industry?
The Australian capability in AI is actually very strong. We have a number of centers in robotics, a number of centers in AI. We are punching above our weight in R&D in that area. But what Australia has not been able to do thus far is take the magnificent work that the universities do in producing inventions and new algorithms, machine learning and so on, to actually create impact for various applications. In other words, a lot of our capabilities actually go to North America or to Europe or Asia to be commercialized. We want to change that so that we are able to, in the investment that we've made for those capabilities, we want to be able to be beneficiaries as well.
You alluded there earlier to reducing the dependence on foreign technology, really about sovereignty, about national interest as well. How are you thinking about the current geopolitical backdrop and how this might evolve some of the developments at the Institute?
Australia relies very much on, pretty much for everything in terms of defense and national security, on foreign capabilities. And we are really very good users, very good procurement agencies for others' kind of assets. What we want to do there is to actually change that, not only to be able to be a little bit more resilient than we are. We can never basically develop all of the technologies that we need, but to be able to develop some of the areas, particularly in the areas in which we actually have some advantage, to be able to bring those to the table so that we are just not always buyers of capability, but actually contributors. And we do have some capabilities in optical communications, in terminals, and many other areas where we can bring to the table. Some of those are world-class. In fact, some of the project outputs from the SmartSat Cooperative Research Center are now tested in the United States and other countries.
Andy, thank you very much for sharing the plans for the Institute with us. Andy Koronios is CEO at the Australasian Space Innovation Institute. Shery?
Avril, we do have breaking news at the moment. We're getting the latest on President Trump's new tariffs, setting 10% on softwood, timber, lumber imports as well. The White House now saying that they're adjusting imports of timber, lumber, and derivatives. And we're also talking about a 25% ad valorem duty on some upholstered wooden products. This is calculated as a percentage of the value of the imported goods. Also, softwood, timber, and lumber subject to that 10% ad valorem duty. Now, what's interesting is that the White House is saying that the wood imports from the EU and Japan, tariffs will not be exceeding 15%. Of course, we had questions about these countries that have trade deals with Washington, what that would mean for extra tariffs that President Trump has been announcing. Remember, he's been threatening 100% tariffs on films made overseas. Already last week, we saw him move with a 30% levy on upholstered furniture, not to mention 50% on kitchen cabinets and bathroom vanities. Now we have the latest on wood, 10% tariff on softwood timber, also lumber imports, and the tariffs on wood products will apply from October 14th. But when it comes to wood imports from the EU and Japan, they will not be exceeding 15%. We'll have more ahead on the Asia trade. This is Bloomberg. More uncertainty on the trade front with President Trump announcing new tariffs when it comes to softwood timber and lumber imports. We're talking about 10% there. Now, the justification from the White House is that wood imports put national security and economic stability at risk and really coming under that Section 232 tariff imposition that we've seen over other commodities such as metal, steel, and aluminum. Now, these wood product tariffs will apply from October 14, and of course, course, we've been wondering, Avril, what happens to those countries that have trade agreements with Washington. We're now hearing wood imports from the European Union and Japan will not be exceeding 15%.
But still subject to levies of some form. And really, to your point, Shery, about adding to the tariff uncertainty, this comes with the levies that are supposed to go into effect tomorrow, including on kitchen cabinets, upholstered furniture, really that sectoral approach. And then don't forget as well, pharmaceutical products. That still could be at play with this tariff deadline, or that these levies could be in effect still, Shery.
And President Trump also talking about 100% tariffs on films made overseas, right? Not to mention, of course, that we were waiting for more details on these furniture tariffs. Not surprising, we have seen, of course, U.S. Treasuries rallying in the previous session, also not because of only the trade uncertainty and safe haven demand, but because we do have a potential government shutdown to contend with on Wednesday, and what the implications, of course, of this shutdown could be on labor data to come out on Friday. Of course, we are expecting that payrolls numbers and the implications of that when it comes to the Fed monetary path decision as well, Avril.
Absolutely. The expectations of a dovish Federal Reserve that is focused on the jobs market. But we have those U.S. shutdown risks, as you just cited. And that seems to be putting pressure on Treasury yields, downward pressure. That seems to be the path of least resistance. So take a look at what this means for the greenback, because it has been coming under pressure of late. And you are actually seeing this sort of knee-jerk reaction to the U.S. dollar already, given all these tariff announcements that we're hearing from the U.S. president. That spike you're seeing in the Bloomberg dollar index right there. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.